AI investors. So I wanted to go over how to determine if if there's a good idea to invest in a company or trade a company. So here are my two principles of investing. Number one is the story and fundamentals of the company. So I know those are very general points to make, but the current story, whatever is hitting the headlines, the trends, do affect the companies in the short term quite vastly. And of course, underlying fundamentals, how much debt, what does their balance sheet look like, cash flows, expected cash flows, future cash flows, predictions of that do play heavily into the fundamentals. So fundamental analysis along with the story is number one. And number two is the stock technicals. So if you see some technical breakout, again, there's many ways to slice this. There's Investopedia. You can go to investopedia.com and read about how you can do TA or technical analysis. But if the technical analysis and the story and the fundamentals agree with each other, that would tell you that there's a higher probability of success, which brings me to my 2 points. So if both 1 and 2 align, there's a higher probability a company is worth investing in. But if one of two of these or both don't align, if they don't align, then it's much harder to say that you should invest in that company in the longer term and potentially in the shorter term. So we tend to look at when you're putting your money to work in the market. I tend to look at this that 1 and 2 both align together, which would create a perfect, in some sense, a perfect way to invest. Okay, so one case study we have is the stock Root. Yes, this stock collapsed. If we look at the story, it was this. It's an insurance company, automotive insurance, fell on hard times, but had improving story and improving fundamentals just a couple of years ago, 1 or 2 years ago. And the technicals were rather strong for this. Though volatile, Root really had some strong technicals. So if we go into looking at this company real quick, okay, we'll get straight to the chart here. We'll see that Root. We'll see that it's been on a tear because inflation's been ticking higher. Now, over here, of course, it was a great investment at $9. Now it's $150. And there's a gap right up here, I think somewhere in the 250 zone, 280 zone or something like that. But here there was improving fundamentals, that had positive earnings surprise. And then if we look at the technical analysis here, right in here between, I guess we're looking at April, let's just say, and here we had a really large period of consolidation and what looks like a bull flag pattern. So it looks like you had also a Fibonacci, Elliott wave here too. So 1, 2, 3, 4, and then 5 higher. Now I'm not recommending investing in this now. In fact, I would just be careful whenever you're investing in a company that's run so much so fast. Even if it's a small cap, especially. But this is just a case study to see what happened and how one could apply fundamental analysis, which the fundamentals were improving. They were strong. The story was improving. And if you had placed money in here, of course, you would have about 15x gain on your money on Root, given this scenario. Of course, a lot of people got shaken out in the meantime, but If you are holding on to some shares, then you definitely, this is one of the cases where it was a big winner. Of course, there are the opposite cases, but you'll see that the fundamentals and those other cases, the fundamentals don't align with the story, or the story and the fundamentals are saying different things. There's confliction there. There's some kind of conflict happening. So it's a bit contradictory. So I just wanted to point out that this was one case study where that theory of TA combined with the story and the fundamentals worked out. Of course, there are others we can look at in the future, but I just wanted to do a case study here with you guys, a live case study. And yeah, hope you have a good one. Like, subscribe, comment. Take care for now.